For more on how long the market can hang in there against a backdrop of uncertainty, let's bring in Wharton Professor Jeremy Siegel. Professor, welcome back.
Good to see you, Scott.
Yeah, you as well. 10% pullback, as Mike Wilson thinks may happen, or the everything rally, as Tom Lee's calling for? Which camp are you in?
Eventually, yes. I think the point, the previous speaker made is always the case. It's like people say, is there going to be a bear market in the next 5 years? And I say, yes. Well, should I get out now? No, because it could go up 50% before it goes down 20% or 10%. And yeah, there's going to be a correction, but if it goes, oftentimes it's going to go up much more before that a correction goes, and that's why trying to time it. That being said, I think the Fed is way behind the curve. They should have been tapering, 3 months ago. I think inflation is going to be a lot worse than the Fed has expected. As you know, I've been saying that cumulatively over the next 3-4 years, we're going to have a 20% increase in the price level. So, when we get out of this, and that's still nothing like the 70s and, no double digits, no hyperinflation, but it's going to be something that is a lot more. And then, well, you don't want to be in cash and you don't want to be in bonds and you don't want to be in money assets, and stocks are real assets. So, there's going to be bumps along the way, what I call taper tremors, but, there ain't no alternative. Rains more now than it ever did before.
Oh, man, people are going to hear you say that. And I was thinking, I wrote it down as you were talking, there is no alternative. I mean, that's what people say. What else are you going to do? What are you watching most of all right now? What concerns you the most? Or is it China slowing? Is it the Delta variant? Is it the Fed? And we're going to have some new reporting in a moment from Steve Leisman regarding that topic. But what are you watching most of all?
Well, I watched the price indices because I think they're going to just be much worse coming up. I know we had a slightly benign one, relatively, last week. But I think that, honestly, the Fed's going to watch those price indices. And the next Fed meeting's going to be after the August report. If that goes back up the way before, you're going to see a lot of things moving forward. But then again, people are going to say, okay, so they're going to taper faster. Hey, maybe they're going to start raising in 2022. But still, who's afraid of a 1% Fed funds rate when inflation's 7%? I want real assets. I want land, I want property, I want real assets. Stocks are ultimate real assets in reality. And actually, stocks that are levered and have borrowed right now, fill up with as much borrowing as you can, because you're just going to be paying back with dollars that are worth a lot less. And there's no trouble passing on these cost increases because there's more liquidity around than there ever has been before. Remember, the money supply in last year increased by more than any other year in the last 1.5 centuries, 150 years. M2 increase in the money supply, and that's got to be followed by inflation.